This episode contains discussion around handling one's personal finances and investing. The information shared in this podcast is for informative and educational purposes only and is not to be taken as financial advice. Remember that any investing or personal finance decisions that you take are your responsibility alone, and it's strongly advisable to do your own research before making any decisions and consult the opinion of a professional where applicable.
Welcome to episode 12 of the Multinational Money Podcast.
Welcome to the Multinational Money Podcast. I'm Johnny, your host, and if you're interested in financial freedom, expat life, and making the most of global opportunities, then this is your podcast. Today, I'm joined by Ryan from Making Money Simple. Ryan's originally from the UK, is an accountant, and is currently working abroad in Australia. And on social media, he shares his investing lessons as to how he's built a six-figure investing portfolio over 6 to 7 years. So we're going to talk about how he managed to do that in this episode, and we're going to talk also about his experience living in Australia. Let's go right into the episode. All right, Ryan, Making Money Simple. Welcome to the Multinational Money Podcast.
Thank you for having me, Johnny. Looking forward to speaking to you over the next hour or so, mate.
Yeah, mate. I've been looking forward to this one for a long time. We finally got it set up. Busy people, both of us, but glad we finally got something done.
Yeah, it took a while. It's hard to organise a call on the other side of the world with the time zones and everything, but glad it's finally come together now.
It is, yeah. 8-hour time difference. But yeah, mate, for you're 26 or 27, if I remember correctly?
Yeah, I just turned 27 recently.
27, yeah. With what you've accomplished with investing and saving, for the age you are, it's incredibly impressive, and I hope it can inspire a lot of other people around your age, or our age. I'm only a little bit older.
Yeah, I was going to say, you're not a granddad yet.
Yeah, not yet. Hit turn 30 in a couple of weeks, so
boom.
So almost
big 3-0.
yeah. But yeah. Hopefully, your story can serve the prove a point that it is possible to save, invest, and create financial freedom and security from a young age. So let's get right into it. So tell us a little bit about yourself. Where you're from, what you do for a living, all that kind of stuff.
Yeah, so I was originally born in North London, grew up there, then we moved out with my family to Hertfordshire for secondary school. Then sort of standard really, school, sixth form, uni, nothing particularly special, did economics at uni, and then as part of that just applied for loads of jobs like anyone sort of does, and then I applied to all the banks, the accounting firms, all of that. Ended up joining an accounting firm, became a chartered accountant, and now I've been an accountant now, and working as a chartered accountant for a number of years. I originally started in London, was there for 4 years, and now I've been in Australia doing the same job essentially for the last 2 years. So that's a very whistle-stop tour from 0 to 27.
But mate, right to the point. I love it. Yeah. And is it CIMA or ACA that you did for accounting?
ACA.
Nice. Yeah. Because I had the chance to do one of them, but I thought with a master's in finance, I didn't see the benefit. Now I see what benefit it can have. It all really depends, I guess, on your career, and what you want to do.
Yeah, I feel it's so hard because I didn't particularly want to do this, but you just sort of apply to companies and then get a job, and then all of a sudden you're in that rabbit hole.
Yeah, doing those exams and spending your evenings sat through papers and study books.
Yeah,
I've heard. Yeah. So yeah, and how about your personal finance journey? Did doing economics and accounting, did that have any link with you getting into personal finance?
Yeah, it did. So Making Money Simple, I started that in 2019. So that was during my final year of university. So in between my second and third year of university, I did a placement year. So I worked in industry in an accounting firm in London for a year. And it was during that year where I've read just loads of books on personal finance and investing. So I didn't really know the first thing about it. I actually had also been auto-enrolled into a workplace pension scheme. So when I actually talk to people about this now, I actually accidentally became an investor in 2017 when I started working through my employer Match. But it wasn't really until sort of 2018, mid-2018, when I actually started properly becoming an investor. And that was just through reading a load of books between 2017 and 2018. The first one, pretty classic one, was Rich Dad, Poor Dad. But then after a bit of trial and error with sort of individual stock picking and stock research, I then settled on index funds, and that has really been my approach since mid-2018 onwards. And sorry to use a bit of jargon already, we can dive into this in a lot more detail. But then it was then in early 2019, so after I'd sort of been investing for like a year and a half, where I then started making money simple. And it was mainly because there was only American accounts on Instagram and YouTube that were talking about this stuff. So I originally started it just to sort of break down simple financial education, personal finance, investing stuff for UK people. And then over the years, it just sort of, grew from like an Instagram to like a podcast, a YouTube channel, and then working with brands. And it's a bit mad, really. I think COVID and lockdown boosted a lot of like people just on their phone all day. So I got a lot of followers during that time. But yeah, no, it's been good. But it probably originally did stem from like an interest in like economics and money and the stock market. But it was really through reading those books. And I probably read like 20 or 30 books in that like first year or two. Made a lot of mistakes, understood it a bit more, luckily found index funds, and that's been my approach for the last sort of 6-7 years of investing now.
Yeah, mate. Well, you've done a fantastic job of educating people and sharing your journey. It's always interesting to watch, and we have a really similar journey into personal finance as well. Because first of all, I was also auto-enrolled into like a workplace pension scheme when I was, for the brief time I was in the UK, and did a placement in the UK. And then same, like while I was finishing university, like I had access to like the university library for like, I don't know, 6 more months after I finished my master's dissertation. And I discovered a book called like Dividends Still Don't Lie. And it was all about, why dividend stocks are the way to go and invest in. So my first portfolio that I built, also around 2019, and when I started Millennials with Money, it was the same. It was like dividend stocks. Actually did quite well, following like the principles of the book, but then same as you, like I'm now just index funds and ETFs pretty much.
This always happens. Everyone I speak to is like, start up individual stocks, researching it, then you realize it's just very volatile and it's impossible to pick the best companies. Even the best dividend paying stocks can cut their dividend or just go out of business at any point. By using an index fund, that's never going to happen. I mean, I have to say it is really nice, like when you get the dividend payments, and but if you think like objectively, like long term, then I fully agree with you. Because actually, there were some of those like early American, like I used to watch them back in like 2017, 2018, where they would like build these dividend portfolios where you'd get paid like every month or every week through these like 20 different US dividend stocks. So I can see the benefit of if you're like earning cash every single week, essentially, it can be quite enticing.
Yeah. If that's your like portfolio strategy as well, then it can be quite a nice one as well. But it's probably for someone who's in a, like you and I are probably in like a capital like accumulation phase of investing, whereas someone who's in like a preservation or like who derives their income from investing, then maybe a dividend portfolio
100%.
is a more suitable approach. Yeah. Nice. Okay, so the next question I had was, well, I think we actually covered all of them in there. So we'll move on to investing. Talking about specifics of investing. So we'll talk a bit more about the specifics of your investing, Ryan. So you obviously shared with us that it's broad ETF, like index fund investing. Like, how did you go about choosing that strategy? Which funds do you invest in? Which ETFs do you pick? And how, how frequently do you invest? If you want to share amounts as well, then feel free.
No problem. I actually just uploaded an Instagram reel, and I can just read this out because it summarizes everything. So my total portfolio is £121,000. My own contributions are £76,100, and most of that contribution is just from my 9-to-5 job. I think that most people think like everyone's making like 6 figures and like balling of Lamborghinis. Like most people don't get rich like that. Read a book called The Millionaire Next Door. Like I think like 80% of millionaires or wealthy people are self-made, and most of them do it over decades through building good habits and doing that consistently. So my contributions, that's 76,000 over the last sort of 7 years. Part of that as well is free money that I've got through my employer by utilising like a workplace match pension, which is an absolute no-brainer, and I'm happy to talk more about that. And then my actual gains are then about £34,000. So I hope that's like a realistic look of actually investing. You're not going to make millions overnight. You're not even going to make thousands of pounds overnight. It's a slow process of investing regularly every single month, a part of your income, your salary, your wage that you can afford, and then essentially letting time and the market and compound interest do its thing. But I'm essentially just a global index fund investor. So of that £120,000 portfolio, about £105,000 of that is in global index funds. The rest is actually in crypto, which is actually quite funny because it's the complete opposite of index funds, not like slow and steady, very volatile. That's a bit of a separate thing. Okay. But essentially all the money I have invested in the stock market through my pensions, my workplace pension, my private pension, my stocks and shares ISA, the various general investment accounts that I have when I'm testing new investing platforms, it's all just in global funds. The main one is a fund called the FTSE Global All Cap, which I talk about a lot on my Instagram and various social medias. Another one I use is called the FTSE All World, or VWRP. They are two funds that are just available on most UK investing platforms. I then have some other funds as well, other global funds inside my pensions, which are like specific to the companies that I work at because there's like conflicts of interest with clients, so I can't invest into anything. So it's a bit more funny. But essentially, my main two global funds that I like actively invest into are either the FTSE Global All Cap or FTSE All World. And yeah, it started off £100 a month into the FTSE Global All Cap. I made a load of mistakes when I first started, like I mentioned in 2017. Picking individual stocks, investing based off tips on like Facebook forums and Reddit posts, not using the stocks and shares ISA, paying massive fees. I was using the high street bank as well. I mean, I think my first investment was like, I think I paid like a 30% fee once you've done like the trading commission, the FX fee. Yeah, every mistake I made in the first few months. But then mid 2018, I got settled on global index funds, £100 a month into my Vanguard stocks and shares ISA. And that's really been the staple over the last 7 or 6 years now. So it's just monthly investing part of my salary into global funds through my pension, my ISA, whatever account I have. It's obviously now a little bit different because I'm in Australia, which I know we'll talk about. But yeah, when I was in the UK, it was very much workplace pension, make use of that match. I used to get a 6% match. Always, wherever you get matched, just take it. It's literally free money. It's a no-brainer. And that's going to be compounding for the next 30, 40 years. And I would then, at my peak, I was putting about £650 into my stocks and shares ISA. So after I qualified as a chartered accountant, my salary went up massively, like 40% or something. I was able to invest a lot more per month. And that was really my two main accounts. And yeah, all that money was going into global funds, a little bit of investing into crypto on the side, but that's always been sort of £50, £60 a month. 95% of my contributions are always just into global index funds, mainly the FTSE Global All Cap. My favourite platform is Vanguard, although I do have other platforms. I'm a fan of Trading 212, but even in Australia, I use Vanguard Australia. So yeah, that is sort of everything. Bit of a brain dump. Happy to go into anything in a bit more detail. A lot of specifics there, so hopefully people can make some notes and then look into that sort of stuff. But yeah, I hope that was helpful.
Yeah, mate, I think you might have just covered off the 4 or 5 questions I had in one go. It's amazing. But interest rates in Europe have increased significantly over the past few years. And whilst that should be good news for savers, it's not always the case if the banks in your home country aren't increasing the rates that they pay on deposits. Fortunately, there's a way to make sure that you have access to the highest interest rate deposits that are available, and that is Raisin. Raisin is an online platform that connects banks across Europe that are offering high interest rate deposits and high interest rate savings account with potential clients that may not necessarily be in the same country as that bank. That means that someone living in Spain could access bank deposits and savings accounts that may be in Lithuania, Italy, and Portugal, where there may actually be better offers in those banks than there are in Spanish banks. With each offer available on the website, you can see what is the minimum deposit, what the minimum term is if it is a deposit. You can also check if you can break that deposit early to have access to your money ahead of the expected maturity date. And you also see what deposit protection schemes are available for your money in that bank based on which country they're in. I've been using Raisin for almost 2 years now, and I'm very happy with the diversification it offers and the access to those higher interest rates, which means I get the best interest rate on my savings. Click on the link in the video description on YouTube or in the show notes on the podcasting platforms and open a high interest bank deposit or savings account today. back to the episode. Let's talk some of the specifics about what you said, because I mean, like, you've shown like the power of investing over like 6 or 7 years. Obviously, we have to contextualize a little bit. First of all, it's not financial advice, disclaimer. And second, the market has been on a bit of a, generally on a bit of a bull run over the past 6 or 7 years. Particularly, last year, the market did exceptionally well. After the pandemic, like anyone who bought the dip, like obviously had potential to make major gains. Nevertheless, like, if you're staying invested over like, decades, then you're going to get really high returns on that as well. Interesting choice of funds as well. Oh God, sorry, you were going to say.
Yeah, and I was going to say, because I think the market, so it's been on the stock market's been doing pretty well since like 2009, really. It's been a bit of a unprecedented 15-year bull run. But I think the actual market now is actually more volatile than ever. So even though it's reaching new and higher every year, the volatility is almost unheard of, just because, I guess just because there's so much uncertainty, inflation, interest rates, so much access to information. Because of COVID, there's now more people investing than ever, because a lot of people took up investing during COVID, and that was also when like my platform, Making Money Simple, blew up the most during COVID, and when I got the most questions. So it's one of those things where it is good, but then you also have got to realise that the market does crash. It will crash massively. I'm expecting to lose at least 50. I think on average the market crashes every sort of 7 to 8 years, and there's normally a correction every 1 to 2 years. So I'm very much expecting there to be 20, 30, 40% crashes through my investing career. I'm probably going to experience half a dozen of them minimum over the next 50 years that I'm investing. So I think that's why reading books is the most important thing is getting started. Don't get me wrong. Even with £100, you can start off less than that nowadays in the UK on some investing platforms. So getting your toes wet and understanding the volatility of the market is very important. But reading some books and having that sort of base level foundational financial education is what will help you hold. Because when I started investing, my first year, I was in the red. Because I invested, but I first probably started investing in mid-2018. All that, like Facebook, all those tech stocks crashed, so it dragged down the global index funds I was invested into. It took me nearly a whole year to actually break even. And so it could have very easily at that point been like, well, what's the point? I'm just going to cash out. But you sort of got to understand it's what the market does. As the market was going down for that full year, I was still investing every month at lower and lower points. And then when it eventually does rebound, of course, that's when you make gains. But it's not to say the market is not going to crash again in the future. It definitely will. It's just, generally speaking, it will go higher and higher. When you zoom out, it almost looks like linear. But then from month to month or day to day, it very much is a roller coaster. So I think understanding it's going to be volatile. Have a bit of foundational sort of knowledge, and hopefully this podcast can help with that. But then, yeah, really, as you sort of mentioned, is all about holding for the long term and thinking in decades, because, yeah, wealth's made in the decades, not in the days.
Yeah, absolutely. I think, you need to have an incredible amount of patience, and you really need to trust the process if you are going to like commit yourself to investing. It needs to be with money that, you don't need in the short term as well, because, if you need to pull that money out for a short-term emergency, then it's like an instant realized loss. So yeah, you do have to think carefully.
Yeah, it's the classic where I say this to people a lot, actually, because people just want to. People are keen just to get started. You just want to start investing. You see everyone making money. It's really exciting. The reality of investing is it's very boring. It's literally, and it should be boring, really, almost like watching paint dry, which isn't what people want to hear. But when you're just putting in, for the first year, I was putting £100 into my Vanguard stock and shares ISA. Nothing was happening. But the good thing is about investing is you can automate it and go about your normal life, still have fun. You haven't got to be. Most people that are looking at charts all day are not making money. Like the data is overwhelming, but 70, 80, 90+% of individual stock pickers will not beat the market, especially over the long term. It's almost impossible. Even like Warren Buffett over the last 10 to 15 years has struggled to beat the market, and he's the GOAT. So if he can't do it, we have no chance. Which is why I think once you sort of have a bit of humility and keep your ego in check, you will just use index funds. And using index funds, if you're earning even like the average UK salary, you're going to guarantee yourself to have multiple 6 figures in retirement. even seven figures if you can increase your income, hold for longer, and the market is kind of some gains. But the most important thing really is, as you say, just putting away a portion of your income that you can afford each month, and then not touching it and letting it just grow and compound for the long term.
Yeah. I wonder if you've ever had like situations like me where you just kind of forget about your investing accounts and then you go back in a couple of months and you're like, oh, that was nice.
Genuinely, whenever there's like there was a crash in the S&P 500 or in the stock market a few weeks ago, well, I think it fell like 7 or 8%. And I got so many messages on my Instagram, and I had no idea that it crashed. And I then checked my investments. I was like, okay, I think I actually was making some posts about this. So I lost about, I think it was £7,000 or £8,000 in that week, just on paper. And then a week later, I was back up to like almost even. And I think now my actual investment portfolio, there has been some of my own contributions over the last month that I've gone in, but now my investment portfolio is back to where it was before this like big crash. And I saw a really good reel from someone on Instagram about it, but there's all these headlines in every major news outlet, and you got to realize they're just looking for clicks. It's all this like, oh, the market's going to crash, it's the end of the market, blah, blah, blah. And then a week later, it's back to normal and it's now at an all-time high again. So that's why a big thing I say to people is just automate everything and just don't check anything. So Vanguard UK actually don't currently have an app, and I'm a massive fan of that because I just can't check. To check my investment portfolio, I've got to go on my laptop, I've got to put in my password, I've got to do two-factor authentication. Unless I'm making a YouTube video where I'm doing a Vanguard portfolio update, it's generally just not worth me. But it takes me like a few minutes to log in. There's no point. I can't be bothered to do that. Whereas Trading 212, I love that platform as well. But you just go on 5 seconds, you can see what it is. You see how much you've lost in a day. Of course, as long as you don't get sucked into the sort of emotional side of it, it's fine. But I think if you can just discipline yourself to not check it, you're just going to be so much more stress-free and so much more happier than if you're constantly stressing and looking at it. I will say that when you first start investing, you will be checking it constantly. It's just like anything. When you start going to the gym or start doing anything, you'll be weighing all your food and tracking everything. And then as you get a bit more experience, you sort of get a bit more used to it. But yeah, I would just encourage people, just when it comes to investing, just automate it and try and check it as little as possible. Because ultimately, it's money for the long term. You don't need it now. So if you're checking it every single day, you're only making yourself more stress for no additional benefit.
Yeah, back when I was doing more financy content, I did make a video saying, I've deleted Trading 212, and the reason why is so that I don't feel tempted to, think too much about my investing strategy, overthink it, and just let it run on auto.
Yeah, because that's why actually, I actually have some people that I speak to, a couple of followers on Instagram who that are quite a bit older, and I think some of their pensions, they still only get quarterly statements in the post. And that's so good because there's a big stock market crash. They have no idea how much they've lost. And then by the time they get their statement, most of the time the stock market rebounds within 6 months. So then a couple of statements later and they've made a load more money. It's just like houses. If houses obviously not valued very often and no one's ever stressing about their house price falling by like 2%. But when the S&P 500 fell by 5-6%, wherever it was a few weeks ago, it's like pandemonium. Everyone running around their head as chickens.
Yeah. I wanted to ask you about something you said about, the clickbait titles and also bringing like social media into it. Do you think that contributes to the volatility of the market as well? Because we're now in obviously a day and age where, information is at the click of our fingers. If something happens in the world, it's on like X or, on Instagram within minutes. And Reddit, like forums like Reddit, like, people talk a lot. Do you think that contributes to like FOMO and volatility in the market?
I think mainstream media makes it massively worse, but then social media makes it better, in my opinion. Because I know me personally, I was tweeting and like putting Instagram posts out about how crashes are normal, don't stress, don't worry. And then no one knows how bad or how big the crash is going to be. But in this case, the market had rebounded in less than a week. So everyone that panic sold has just caused themselves unneeded stress and lost money, and then they've got to buy back in at a higher point, which is why I'm just a massive fan of the buy and hold long-term investing strategy, because it's impossible to predict what's going to happen. Literally no one knows. If anyone could predict the market, they would be the richest person in the world. You only need to predict it once. If you could predict it correctly once, you would borrow unlimited money from everyone that you knew, predict the market, and then be like the richest person in the world. The reason why no one's done that is because it's literally impossible. There's like that great line where it's like economists to predict the last like 35 or what's it? It's how like economists are really bad at predicting recessions. There's always a recession, and then it eventually like comes. Well, of course it's going to come. There's this bloke on BBC News who's been predicting it for the last 6 years. So when there is a recession now, of course you're right, mate. You've been saying it for the last 6 years. But in that meantime, the market's gone up by 200%, and then it's dropped by 50%. So we're still up 150%, and people get so sort of caught up in the day-to-day of it, and just, you got to zoom out and think about the long term. But I think that when there are crashes and bad stuff happening in the market, social media helps, because like me, I know a lot of people that I follow, similar to you, are like accounts that try and spread some like good, sort of sensible financial knowledge. None of this like clickbait stuff you see in like the Daily Mail or the Sun, or like those like US outlets trying to just get everyone to panic and get a load of clicks.
Yeah, good stuff.
Also, platform. So come back to that one. So yeah, Vanguard is my favourite platform. I think in the UK though, Trading212 is another good option, and also Invest Engine is a good option. They're probably the best free platforms, I would say. A lot of people use robo advisors, so stuff like Nutmeg or Moneybox or Money Farm. It's definitely better than doing nothing, but I personally don't use them just because they're higher fee and you have less choice. They're generally more sort of actively managed rather than using a passive index fund, which is why I just prefer using more DIY platforms where you have more control, more autonomy for lower fees, like Vanguard and Trading212. They're the main two I normally talk about on my own sort of platforms. And then, the main accounts that I've used, ISAs and pensions, I always, whatever country I'm in, even in Australia, always trying to make the most of any sort of tax efficient accounts. And then, the actual investments are always global funds for me. In every account that I've got, my only investment is essentially a global fund, just because I think it's the best and easiest way to build your wealth over the long term.
Yeah. ISAs, I can't tell you like how much I miss like being able to have that tax-free, like, dividend and capital gains allowance. Well, to be honest, I never really had it, only for like cash savings, because my investing journey started actually outside the UK. So I missed out on that. But
ISAs are OP. In Australia, there's no equivalent. And ISA is just the best It's got to be the best investment account in the entire world, I think. Because in the America, I think they get a $6,000 similar ISA equivalent. I think Canada has nothing similar. Australia has nothing similar, for a fact. I don't think New Zealand has anything similar. So, the ISA is just the best account. I really hope they don't cut that. Because, £20,000 tax-free capital gains, dividends, bond interest. Yeah, it's brilliant.
It is. It's fantastic. Yeah. And in Western Europe, like in France, you have something which is, it's nowhere near as good as the ISA, but basically they have something where you can purchase like stocks that are listed in Europe, and you'll get like a French capital gains tax exemption on the net result of the portfolio. You'll get a exemption on dividend tax from French companies. And what else? Yeah. But again, like capital gains taxation in France is not the same as in the UK. So you still end up paying something.
Is that just individual stocks, not on European listed ETFs and index funds?
You can get it on European ETFs and index funds as well. But basically, you've got like a list of eligible assets to be. Yeah. Like I couldn't buy like a US, like something from the S&P 500 and put it in there. But I could buy an S&P 500 ETF that's listed like within the EU.
Yeah. No, yeah. The UK, the UK investment accounts are generous, and I didn't realize. I realized how good they were till I left. Same. All right. There was another question I wanted to ask you. You share like the value of your portfolio online, and it's something that I stopped doing for like security reasons. How do you make sure, and how can others investing make sure that they keep their accounts like safe and secure? Because there's obviously a lot of scams, and hacking is becoming more and more common. So what are some of the best practices that you use and that other people can use as well? Yeah, I mean, I'd say like if a random person DMs you on Instagram, that's always a red flag. And if it sounds too good to be true, it probably is. I mean, on all my investment accounts, I obviously have like my address, my phone number, two-factor authentication, whether it's like through my phone number or like an authenticator app. So I would say that's probably the best way to just keep it safe. I share my numbers online, and even when they were like very small, like I was doing £100 a month and I had a few £1,000 invested. And then some people get a bit annoyed now because they're like larger, but I mean, I've been doing it for like years, so I'll carry on doing it. I think it's a net gain to help people. But yeah, I would just say if you're using the reputable platforms, it's probably the easiest thing to do. So, and this is probably more a thing of crypto, where there's a lot of dodgy platforms about with investing, particularly in like the big countries. Like you got Vanguard, they've been around since the 70s. They have trillions under management. You've got even like Fidelity's massive, HSBC's massive, even Trading112 has been around for 20 years. It's massive. It's got billions and billions under management on that people use on their app. So yeah, use a reputable platform, use a good password, use two-factor authentication, and I think you'll be fine. That's my approach anyway.
Yeah. And with the platforms as well, like something I always look out for is like the regulation. Like you talk about like Trading212 and Vanguard, they're like FCA regulated. Like in the US, like SEC is overseeing them. In Europe, like, you know, you got different, like most of these platforms in Europe, they have like some kind of European financial regulator overseeing them as well.
Yeah,
so
that's
that
a good
can
point.
Also, yeah.
Yeah, just use a reputable platform and you'll be fine pretty much. Don't use a dodgy little website.
yeah, good stuff. Now, I feel like I'm getting an exclusive here because I think I'm the first one that gets to talk to you about your experience in Australia and, you know, really dive into it. You've shared snippets online, but we're really going to talk more about like how it's been for you here. So how did it come about, like the opportunity to move across to Australia?
Yeah, so I was working, as I said, in London for a few years. And then once I qualified as a chartered accountant, so I qualified in 2021. So the company that I worked at offers secondment schemes where you can go abroad. A lot of them were closed though for like 2 years because of COVID. But fortunately, they opened up again whilst I was still there. And I applied at the end of 2021 when they first reopened. And I then moved over to Melbourne in Australia in mid-2022. Fortunately for me, Australia, particularly Melbourne, was very, very locked down during COVID. I think Melbourne had the worst lockdown in the world in terms of like most consecutive days locked down where people just couldn't go out or leave like their house more than a few K. So they were desperate for people because there hadn't been any lateral hires for like over 2 years. So it was sort of a bit of working hard and good timing with everything. But yeah, just applied through the like secondment scheme, had a few interviews, and then moved over. It was actually, I think because of the timing, I timed it well with everything that was going on, so it was probably a bit easier than it is now.
Yeah. Was there a reason you chose Australia, or did you look at other countries as well, and then you ended up, you know, like getting Australia out of, you know, like the business needs or whatever?
Yeah, I originally wanted to go to America for many years, but I worked with a lot of Americans in London, and I don't think it would have been for me. They just are workaholics, and yeah, I think America's a bit of a different beast. All the people that I spoke to, when they would tell me about American working life, whether it was like California, New York, even in like random places, or not random places, but like not like business capital places, like other like cities, they'd be working like 12, 14-hour days, working Saturdays, and that was the norm. I don't know if it was just like the people I was talking to, I was unlucky, but that really put me off. Whereas all the Australians that I worked with in London, it just seemed like the UK, and it is like the UK. It's a very similar culture, if not a bit more chilled. And yeah, that was what sort of pushed me in that direction.
Swayed you that way.
Didn't want to work too hard, wanted to have some fun while I was travelling.
What are the work-life balance? Who was it?
Yeah. But yeah, I think it would be fun though to work in America for maybe like 3 months or 6 months. But I think if I was going to go, well, I'm here for 3 years. So I feel like 3 years, I would have just been, I would have killed myself in America, burnt out. And I didn't fancy doing that.
Yeah,
they do get much higher salaries there. And it is much more of a corporate, capitalist, hustle sort of culture. It would have been maybe interesting to work in that environment for a little while. But I think, yeah, Australia was calling me a bit more based on the people that I worked with anyway in London.
Yeah, you might have stacked a few more Benjamins for your invested account in the US, but probably in terms of, you know, life experience and, you know, the experience of living abroad, probably you get the most out of Australia.
That's definitely true, actually. Would have made a lot more money, but it's not all about money. Well,
It's not all about money,
So-
Even though we are finance people, we have to strike the balance as well. So Australia, you said it's very much like the UK, but I imagine there are some differences there. So what differences have you seen in the way of life?
So I'd say, generally speaking, Australians are just a bit more laid back. It's a bit more chilled. But the actual culture and the banter is pretty similar to the UK. People are obviously keen to go out and have a drink, to go to a sporting event, gigs, restaurants. It's sort of, because I work with a lot of people from other parts of the world, even in London and in Melbourne, and a lot of people just work mad hours, where I think actually the UK has got it pretty good and it's similar to Australia. But in terms of sort of day-to-day life, so when I compare Melbourne to London, my rent is a lot cheaper compared to London. In London, this was in 2020, I was paying £1,000 a month. My rent has never reached that. I think even now, there has been a bit of a rental crisis in Melbourne as there's been big immigration into Australia the last couple of years, and now it's sort of catching up because of lateral hires and backpackers and all sorts. But so even now my rent is about £800 a month. And I don't know anyone in London really paying that unless they're in a 6-man share house, on the M25. So my rent is a lot cheaper. The food shopping though is a lot more expensive. So
Get that impression.
Yeah, food shopping is a lot more expensive. Drinking is also a lot more expensive. If I'm going to be drinking some Guinness, it's sort of minimum sort of £8 a pint, I would say. Depends where you go. But minimum £7, normally sort of 8, even sometimes £9. So it does get up there. I know London pints are expensive now as well. I'd say eating out in restaurants are sort of the same. I've got to pay for private healthcare as part of my visa, so that's a bit of an additional expense. The bills are much cheaper actually, because I think Australia produces a lot of its own resources, so the bills are actually peanuts compared to what I was paying in London. I'd say overall though, it probably works out similar, I would say. I think if you're from anywhere else in the UK and you moved to Australia, it would be a lot more expensive. But I think if you're sort of used to living and working in London, particularly paying the ridiculous rent prices and nightclub prices and stuff, coming over to Australia, I'd say Sydney's probably on par with London, and then Melbourne's probably a little bit cheaper. But I've not obviously got a house here, but from what I've heard, I think a house price, you can get a decent house that's not too far from the city for a lot cheaper than London. And I think it's just because Melbourne anyway is so much smaller than London, so it's so much easier to get in and out of the city. You jump on the tram, it takes 10 minutes, whereas even when I was living in London in a close zone to the office, it would still take a minimum half an hour. So I think it's just because it's so much smaller, it's just a bit more accessible, and you get a bit more for your money when it comes to house prices. Not that I've done that in either country, but that's sort of the impression I've got just through mates. But yeah, that's probably the things. I'd say overall it's a pretty good place, just like London. It's a good place to live if you're in your 20s, share a house with a few mates, have some fun, a few nights out, of course, investing every month as well. Bit of balance, got to have both.
Yeah.
But no, overall it's good. Yeah, I think as well, when you're in Australia, you can sort of, day trips are quite a big thing, going down to the beach. You might, particularly if you're in Sydney, I've got mates there that'll be surfing every day. They'll go before work, which is mental.
Yeah.
In London, going for a 10-minute walk before work was lucky, not let alone going for a surf. It is a sort of different way of life, but I still really like London. I'm not going to knock it. I'll be back one day. But that's probably the first things that come to mind. So I hope that was helpful. If you've got any other questions about it, let me know. Or if anyone that's watching or listening to this has any questions, feel free to let me know. I'll make the odds TikTok on it, and I normally get loads of comments and DMs about what's Australia like? How does this work? How does that work? So I'm happy to help people out and point them in the right direction if they have any questions.
If you're traveling or living abroad and you need to use a different currency from your home currency, then check this out. I've been using a multi-currency platform called Wise for many years now, and it's a great solution for people who are looking to send money abroad, convert money, and spend money in foreign currencies. Wise offers competitive exchange rates with low commissions, meaning that when you need to exchange money to another currency, you don't overpay to do so. now. You can get bank details for a range of different currencies to be able to send and receive money abroad. You also receive a virtual debit card so that you can make purchases in other currencies, which is particularly useful when you're traveling. And you also have the option to get a physical debit card if you wish as well. This is an absolute must-have for me when I travel. I've been to multiple different countries around the world with my Wise card, and I'm very happy to have done so. It also helps me on a daily basis when it comes to banking in multiple different countries. Sign up to Wise today using the link in the video description on YouTube or in the show notes on podcasting platforms. And now let's get back to the podcast. Yeah, well, mate, that's how I ended up becoming like a Spain YouTuber more than a finance YouTuber, because I saw like the Spain content was getting more interest, and I decided, okay, well, I resisted it for a long time, and then eventually I was like, okay, the people want Spain, let's give them Spain.
You got to pivot.
You have to, yeah. And this is more of like, yours is obviously like it's a short term, like 3, I think you'll be back in the UK, whereas I've been in Spain for almost 5 years now, and it's more of a permanent thing. So yeah, I've had,
that's unreal.
Yeah, so I mean, I've had the time to, learn a lot about how things work here, like administrative, like process, even like personal finance. Like I don't think there's many other people like making like finance content on Spain in English. So I think
yeah. I was gonna say I'll chat to you about some Spain investing stuff at some point.
Yeah, definitely, mate. Yeah, we'll I'll come on the Making Money Simple podcast and we'll talk all about it. Yeah.
Boom.
Yeah. So from being in Australia, what do you think are some of like the like the best life experiences and the best like personal growth or professional growth as well that you've had the chance to experience?
I think probably like from a career point of view, the office here is much smaller than London. London now is thousands of people, whereas here it's only hundreds. So it's a bit easier to have a bit more of an impact and progress a bit more quickly because you can sort of work hard and show your face more to the big dogs, whereas in London you could easily go under the radar because there's so many people. Personally, I'd say it's just obviously other side of the world, sort of try and travel around as much as possible, whether that's sort of in Melbourne and Victoria, going on like weekends away to places, or actually going to like other places in Australia, other states. I would say though, I've been here for 2 years, and I know this isn't the case, but I feel like I've done nothing. I feel like when I'm working full time, it's still the whole thing where you get like maybe 1 or 2 holidays a year. You try and do weekends away where you can, but then there's other life stuff that gets in the way. So I'm trying to make the most of my time. But I think once I actually finish up here, I would like to have a bit of a sabbatical and then maybe spend like a few months actually going around and backpacking around Australia so I can properly see it rather than doing like quick little excursions to like the mountains or to a campsite or down a road, like that beach, Great Ocean Road in Melbourne, as an example. So yeah, there's still a lot to do, but it's been good so far.
Yeah, mate, absolutely do those experiences that you want to do, because I'll tell you from like having lived in other places, like I always look back at when I lived in, Paris, for example, or when I lived in, south of France, and I think about, oh yeah, all those good times that I had, and like, as you go on in life, like you look back and it's like something that like no one can take from you. And it's a great thing. So don't like make it happen for sure. I'll tell you that.
Making Australia simple is coming.
Yeah. Ryan's latest venture. Yeah. So that was my bit of advice for you on, travel abroad and how big your experiences. Do you have any advice for people watching about, moving abroad or moving to Australia specifically?
Oh, yeah, I would say just do it, to be honest with you. I feel like it's one of those things where, like, even for me, like, home's always going to be there. You can always go back home, get, like, the same job back, most likely, or a similar job back. Worst comes to worst, move back in to your parents' house, or, like, it's not the end of the world. So I would say just go for it. You're probably going to regret it more if you don't do something rather than if you do it and then it turns out badly, because it most likely won't. But if it does, at least you've given it a go. And even if you probably still make the best of a bad situation. If you came into Australia and for some reason you hated it, you might still meet a few good mates, have a few good nights out, go travelling around a bit, see some places, see some kangaroos. So then even if you only stay for a few months, at least you've done some stuff that you might never do again. And a lot of people have never done. So yeah, I would say just go for it. It is easier said than done though, because even myself, I'm thinking like there's probably some things I could have done that I just didn't go for it. But I would say go for it. Worst comes to worst, go back home and then go back to your normal life and normal job and whatever you're doing day to day right now.
Yeah, I 100% subscribe to that philosophy as well. And so far, I'm satisfied with life. So I completely agree.
There you go.
Yeah.
You're a case study
Mate.
right there.
Well, both of us are case studies. Yeah. Ryan, this was a fantastic discussion. Thanks so much for everything that you've shared. Now, before we finish, as with every guest, I've got a fun question for you. And your fun question is about something that you mentioned earlier in the interview, a pint of Guinness. It seems to be a regular... Pints of Guinness make regular appearances in your Instagram posts and stories, and I want to know, where does it come? Like, where's your fascination with Guinness come from, and how many different countries have you had a Guinness in?
I think it's just the best pint. Undoubtedly speaking, the best pint. It's the only thing my dad drinks, and the only thing he's drunk for about 30 or 35 years. So me and my brother just we didn't really like it when we was like younger, but when we sort of got into our like late teens, early 20s, we just sort of started drinking it. Most of my mates drink it in England. Every housemate I seem to live with, I seem to turn them onto it, and they then love it as well. I think it's just a good pint. It always goes down well. People say it's heavy, but it's not. It's light, it's smooth, it's creamy. And yeah, a lot of my stories are just pints of Guinness, which is quite funny. You got to balance say, investing and drinking. How many countries? To be honest with you, so whenever we would go on holiday as a family, we'd always find the Irish pub, although that was when I wasn't drinking, when I was a bit younger. So since I've probably been drinking, I'd probably say at least 15 or 20 countries. Any lads holiday I've been on, we'll go to an Irish pub. Normally, if I'm backpacking, if I see an Irish pub, I'll pop in and have a quick Guinness, as bad as it is. Most of them are pretty shocking when you go to like some of the places in Southeast Asia. Even in Australia, most of the Guinness you get is pretty shocking. But if it was an Irish pub, I still prefer a bad Guinness than like a lager, so that's what I normally do. But yeah, it's probably a bit of a family tradition, and yeah, I reckon most countries I've been above 18 or I've been drinking. I reckon pretty much every country I've been to, I probably had a Guinness, so it's probably like 15 countries. I should make a formal list and then post that up on my story.
You should, mate. Absolutely, 100%.
Inspired by you.
Yeah, mate. I mean, I'm not like a big drinker. To be honest, I don't really drink that much anymore these days. But being from Newcastle, like I've seen Newcastle brown ale in like the most random places in the world. So I can imagine that there's.
And when you see it, you'll have a pint.
I take a photo of it, and I'm like, I found it in, I don't know, Turkey or wherever. But yeah.
No, that's similar to what I do, but with Guinness. Yeah.
Well, mate, Timmy from obviously Mr. Money Jar.
He loves a Guinness.
He does, yeah. When we were in Madrid, we were going for a walk around, and I asked him, like, do you want to stop and get a drink or something? And I told him, we can get a Guinness in your honour.
I've had many pints of Guinness with him when I was in London. That was like a normal thing. Meet up and go for a Guinness somewhere.
Yeah. He's there with his Guinness, and then I'm there with like my, fizzy drink or
lemonade and lime. That's also nice, though, to be fair. But exactly, Guinness. I'll well, if I'm in Madrid at some point, you can take me to the same pub and I'll get a pint of Guinness.
Absolutely, mate. You let me know, and we'll send a picture to Timmy as well.
No, legend. Cheers, Johnny.
Yeah. Cheers, Ryan. So guys, I hope you enjoyed that episode. I hope you found it helpful and inspiring. Remember, if you'd like to support the podcast and the work that Millennials with Money does, then you can do so by becoming a channel member on YouTube or by signing up on Patreon. And in return, as a thank you for your support, you'll get access to exclusive content such as members-only live streams, behind-the-scenes content. You'll also get to ask me your questions and I'll respond to them as well. You'll get to watch these episodes, the podcast episodes, without ads as well. So next time, I'll see you on the next one. And let's get this money.